For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. The remarkable rise of Nvidia has captured the attention of investors and analysts alike, marking it as one of the most impressive growth stories in recent years. No other company has managed to achieve such rapid expansion at the scale Nvidia has experienced. However, as the past achievements of the company become history, investors are increasingly focused on what lies ahead for Nvidia's stock. The challenge is that the future landscape for Nvidia is filled with uncertainties. While there is potential for continued growth, the company may also encounter significant hurdles related to its core products. At the heart of Nvidia's success are its graphics processing units, which have evolved far beyond their original purpose of enhancing gaming graphics. Initially designed to accelerate the rendering of video game visuals, these powerful hardware components have found a multitude of applications across various industries. Today, graphics processing units are essential for running engineering simulations, mining cryptocurrency, and most critically, training artificial intelligence models. The latter application has been a significant driver of Nvidia's growth over the past year and a half, as the demand for artificial intelligence capabilities has skyrocketed. One of the key reasons graphics processing units are preferred for managing extensive workloads is their ability to break down complex calculations into smaller manageable parts and execute them in parallel. This parallel processing capability allows for much faster computation than traditional central processing units. Additionally, multiple graphics processing units can be combined within a single server, further enhancing the overall processing power. In fact, the primary limitation to constructing these powerful servers for artificial intelligence applications often comes down to the financial resources available to a company. Those with deeper pockets can invest in the necessary infrastructure to harness the full potential of artificial intelligence. The explosive growth fueled by artificial intelligence is vividly illustrated in Nvidia's data center revenue, which soared 427% year over year to an impressive $22.6 billion in the fiscal Q1, which concluded on April 28th. This staggering increase highlights the surging demand for the company's products in the artificial intelligence sector. Even more noteworthy is the 23% rise in revenue from the previous quarter, reinforcing the notion that demand for graphics processing units is not only strong, but is also accelerating. To put this into perspective, if a company can achieve a 25% growth rate in its quarter-over-quarter revenue, it would more than double its quarterly revenue by the end of the year. Nvidia is currently nearing this remarkable benchmark, and the quarter-over-quarter revenue growth serves as one of the most reliable indicators of sustained demand for its graphics processing units. In addition to Nvidia's impressive growth figures, major technology companies have communicated their intentions to ramp up spending to enhance their computing power in response to the burgeoning demand for artificial intelligence. This trend is particularly promising for Nvidia, as its business model relies heavily on its clients' willingness to invest in the necessary technology to support their artificial intelligence initiatives. As these tech giants continue to allocate resources toward building their artificial intelligence capabilities, Nvidia stands to benefit significantly from this ongoing investment. While Nvidia's gross and profit margins have expanded to unprecedented levels, which is undoubtedly beneficial for investors, there are growing concerns about the sustainability of these margins. Some of Nvidia's largest clients have begun developing their own custom chips to replace graphics processing units for their artificial intelligence computing needs. This trend is likely a strategic move in response to the high prices they are currently paying for graphics processing units, which could erode Nvidia's market share if these clients successfully implement their in-house solutions. A prime example of this shift can be seen in Alphabet's tensor processing unit. When configured correctly for artificial intelligence workloads, the tensor processing unit can deliver performance that significantly outstrips that of a graphics processing unit. As major cloud computing companies introduce their proprietary products, this could pose a formidable challenge for Nvidia. Despite the challenges posed by the emergence of alternative solutions, graphics processing units remain exceptionally effective for running artificial intelligence models and will likely continue to be heavily utilized in the foreseeable future. However, investors should approach the situation with caution, as there is a genuine risk that Nvidia's profit margins may soon face significant pressure. If Nvidia's profit margin were to revert to its previous peak of approximately 40%, it would necessitate around 42% more revenue to achieve the same profit levels that the company currently generates with its 57% profit margin. This scenario raises concerns, especially considering that Nvidia is already trading at a premium valuation in the market. Such a shift shift could have profound implications for the company's stock performance. Looking ahead to what Nvidia's stock might look like in 3 years, it seems likely that the company will continue to be a dominant player in the industry, producing an impressive volume of graphics processing units to meet the ongoing demand for artificial intelligence applications. However, it is also plausible that the stock price may remain relatively stable due to the anticipated margin compression. This potential stagnation in stock price, despite continued revenue growth, is an important consideration for investors. This often overlooked factor is crucial when evaluating an investment in Nvidia. Investors must recognize that while the company may continue to experience rapid revenue growth, maintaining elevated profit margins is essential for the stock to remain an attractive investment opportunity. The interplay between revenue growth and profit margins will be a key determinant of Nvidia's long-term success and its stock performance in the years to come. In conclusion, Nvidia's journey has been marked by remarkable achievements and unprecedented growth, but the road ahead is fraught with challenges. As the company navigates the evolving landscape of artificial intelligence and competition from in-house solutions, investors must remain vigilant and consider both the opportunities and risks associated with Nvidia's future. Understanding the dynamics of revenue growth and profit margins will be essential for making informed investment decisions in this fast-paced and ever-changing market. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.